today is kind of go through all of the financial nuts and bolts of small business finance so that we can make sure that you have everything in order for smooth sailing. Obviously, first for compliance, but also for hopefully running a profitable business, right? That's the name of the game. You guys are doing such hard work of being business owners, right? You could go keep working as a teacher, working for someone else, but you've chosen to do this, which leads to great rewards, right? If you're a business owner, I mean, autonomy, flexibility, pay, right? There's a lot of different rewards and benefits of being your own business owner. And so we want to make sure that you're set up for success so that you can thrive, right? Not just survive. The big one, the huge one, right, is the financial decision making. That's number one. That's like my nerdy bookkeeper mind. I want you guys to be looking at your numbers and then deciding. So like you had just said, right, I want to be open every day so that people know I'm here. One step above that, right, would be looking, if you're in Square, they have great reports for this. You can see what your revenue is every single day of the week. So you can see, okay, on Mondays, I make no money. Nobody ever comes into the store on Mondays. Tuesdays, yeah, there's an uptick. Might be worthwhile to come in. But Thursday, Friday, Saturday, Sunday, that's when I'm really making my money. And so rather than saying, I need to be open at all hours for the possibility of someone coming in, you can use that data to say, wow, I'm making my biggest bang for my buck the second half of the week. So I'm going to stay open. I'm going to be a Wednesday through Sunday business, right? Because we want to think about you, even though you're like, it's just me, I'm going to be there. It's your time cost. All right. And you're the most valuable asset in your business, right? So we want you to be, maybe you're working on your business in those really slow days. Like, yeah, sure, you can work behind the computer and do some ordering and have nobody come in, sure. But we don't want that to be every single day, right? So being able to make those decisions for you, right? Maybe it's deciding, like, if you have to, maybe you're ordering in specialty parts, making sure that you're getting that markup for those parts for every client, right? Being able to make sure that that's happening. The second one, track business segments. You guys don't really have like, so what I'm thinking for here, this is like if you have multiple revenue streams in your business. Like, are you providing just one, like you break your Harley, I'm fixing your Harley. Is that it? Pretty much? Yeah, right. So you have one revenue stream.
Yeah. I mentioned cleaning, he cleans motorcycle and car parts. That's kind of a separate.
Yeah.
Vapor honing.
Okay. So yeah, so those two, right? Those sound very different. You might, if you're already in QuickBooks especially, you can have two different revenue streams, like income accounts, so that you can track how much are we making for cleaning versus repairing. And if he's finding that it's taking him way more to clean and you're not making much money from it, right? Then maybe it makes more sense to just focus your advertising on the repairs where you're going to make more money, right? And spend less time.
Okay.
And so we want to move from the compliance side to like, let's be strategic. Like for me, so I do a lot of like these trainings and I was finding that at first I was like, oh, it's so nice to like leave the state. Like I was going to like Delaware, DC to do these presentations. And I was looking at the amount of money I was making was good, but between driving the 3 hours and staying over in a hotel and eating my meals out, it's like, Jamie, I'm not making any money from this. Like this doesn't make any sense, right? Like I could be with my kids. So I cut that. Like I only work in Virginia now and really like an hour and a half from home, and making sure I could drive home back and forth in a day. Right. And so those are the decisions that I made because I have my workshops, I have my ongoing, I have my consulting, all that stuff to be able to really make some decisions. Next is your legal, right? So unfortunately, being a business owner requires the federal government, the state government, everybody to kind of be keeping a closer eye on you. So like we had mentioned, both of you are selling a good. So we have the sales tax to be collecting and remitting every month. You got a handle on that? Okay, good. And remember, something that I see as so much with my clients, just pay it on time, right? Like don't get those penalties. This one is planning for the future. So when you have good record keeping, bookkeeping, a software, you're able to see trends of when am I most profitable? Like when are people, I bet you'll see this, when are people repairing their motorcycles most often throughout the year? Like I bet there are busy seasons and slow
Yes.
seasons, definitely, right? Like
Yeah.
I bet you probably get a lot at the end of the fall, right? Before everyone puts them away for the winter.
Yes,
And I bet your winter is really slow until maybe like March when people are like, oh crap, I gotta fix my tune up my
yeah,
motorcycle,
that's
right?
true, yeah.
So thinking about that so that you can have that nest egg, right? Start saving a little bit of money so you can pull from that savings when you have those lighter months. Okay. But also maybe you guys start crushing it and you want a storefront, right? Being able to start putting a little bit of money aside month after month so that you're ready to make that next move. Maybe for you, it's hiring someone, so you don't need to be in the store 24/7, right? So thinking about how you can make your business turn into what you want it to. Thing that you want to think about is lender and investor credibility. I don't think that's for either of you, but that's if you wanted to get a loan for your business, if you needed an inflection of funds, right? I don't think that that
No.
is either the case for either of you,
Alright.
but just something to consider. If I haven't convinced you yet that you need to get organized. So let's see where you all are at so far. So go ahead and for the 1 through 5, give me a finger. How many fingers can you put up for the setup basics for record keeping?
3,
3? Okay.
except that for number 4, we had to put some personal money in the beginning,
Yeah.
so we have to figure out how to get that out again.
Yeah.
Or at least account for it, I'm not
Totally.
sure how to do that.
Yeah.
So. But we don't have emergency savings and we don't set aside funds for taxes.
Okay.
I mean,
You're new. You're brand new. You're
Yeah.
okay. You get there.
How
you get
how
there.
long have you had your business?
just
open?
really a month. We started in May.
Oh, that's
Yeah.
nice.
Yeah.
I mean,
Get the business checking, okay? That way, what we really want to do, this goes with number 4 too, right? We want to make sure that everything business related is coming into your business account and leaving your business account, right? So the income comes into your business, all of your expenses leave your business, right? We want it to be nice and neat because if you ever got audited,
Mm.
they're going to say, let me have your bank statements, let me have your profit and loss so I can match everything together. If things, if they're, again, startup costs don't count, right? I mean, they do count, but everybody knows that starting your business is messy, right? So what we're gonna do is we're gonna add those to your QuickBooks through a journal entry to say those are your investments that you've made
okay,
outside of the business. But if everything is everywhere, right, especially when we're talking about personal, like running our business through a sub account of your personal, they're gonna be like, what the heck is this, right? We wanna make sure that everything is just nice and tight, okay? If you use credit cards, just get a business credit card, okay? It works the same way, and also if you're using a business only bank, they're like the one I use, ooh, you have cash, do you have a lot of people pay you cash?
No, they pay
No.
you by square.
Just Square,
So,
you only accept, you
no,
don't,
I just have cash and
Okay.
I have everything. But I mean, no, just a square in cash.
okay,
But yes, and I'm charging the tax for all my sales on
Yeah,
the
good,
square
good,
thing.
good. And what are you, how are you,
well, right now, we don't take credit cards, we only take checks and,
cash?
we would take cash, yes.
Okay,
I mean,
Okay.
we've only had one customer.
yeah,
He gave us a check.
Okay. The reason I'm asking, just, I don't even know where my train of thought was there, but for cash, we wanna keep track too of everything in one nice neat place. I don't know where I was going with that. That's okay, but yeah, get your debit card, if you get your credit card, try to keep everything as tight as possible.
I'm putting
Yeah.
like how they pay me. Like if you sell something, I put how they pay me, cash or debit. And
Yeah,
on my
right,
record,
that's
I have like that.
Yeah.
And also I have
Emergency savings. So this is a big one that is really tricky for some reason for businesses. But open up a high yield savings account for your business, right? High yield savings account, you get tons of, it's like 3% right now of free money for whatever your balance is, month over month over
which
month.
one?
Number 2, an emergency savings.
Emergency savings.
Um, so that you have that buffer for when you have those slow months, for when you need to buy inventory, right? You want to make sure that you're not putting your bank to zero, your bank balance to zero every month. Okay, so I have one client, she's super small. She has an auto transfer of $75 a week. And she just puts that to her savings every week. And now she's at like $10,000 in her savings account, right? It doesn't hurt you when it's a little bit amount at a good frequency. So just think
So
about
you just put it like what? I don't understand how.
so you know how you can do auto transfers?
Mhm.
So she sets it up that she has $75 go from her
Oh my
checking
God, you
to her
let's say
emergency savings every week, which it doesn't really hurt her, right? It's only $75. But it adds up quick, right? And so
Okay.
just think about what systems you can put in place to keep your business as healthy as possible. And then finally, number 5, that's setting aside your taxes, your income taxes. So we're gonna kind of come back, Sandy, to what you were talking about with the 30%. So when we
Six.
think, yeah, well,
60%.
I care about the 30% more. So listen,
No, 40, 60 and 40.
so you have your income, right? We're gonna look at the profit and loss in a little bit, but you have your income at the top of your profit and loss, all the money you've made. Then you have all of your expenses, right? Business expenses are deductible, which means that you get to take your income, subtract your expenses, and then your profit, right? We also call that net income. That's all you pay income taxes on. So if you're just starting off and you just paid a ton of money on legal and all of that, right? You're like, you know what, our goal is to break even for 2025. Maybe that's the case, right? If you're at zero for net profit, that means that you don't owe taxes for your business, right? That is not necessary. It's not a good thing, right? Except for when you're first starting out. We want you to be paying taxes for your business. We want you to be profitable, right? Those go hand in hand. You have a healthy business if you're paying taxes,
Why?
right? Because what that means is that you brought in more money than you've spent, which is what you want, right? We want you to have an income of $100,000 this year, but that you only spent $50,000 on all of your inventory and your operating expenses. That means that you have $50,000 left as profit, which you can use minus, we're going to talk about taxes in a second, for paying yourself, maybe reinvesting in the business, right? That's like your cushion. So your profit, of your profit, that $50,000 we're talking about 30% of that we should be putting aside for income taxes. All right. Because unfortunately, so we have so many benefits of being a business owner, but one of the disadvantages of especially being an LLC or sole proprietor is that we have to pay self-employment tax, which is your Medicare and your unemployment, Social Security. So a great habit to do, this is like the game changer habit, is that every month you're looking at your profit and loss, your income minus your expenses, seeing what that profit is, multiplying it by 0.3, which is 30%, and moving that amount over into a savings account. All right. That way, when it's time to pay your taxes, you're not surprised, right? If you're like Jamie, I'm in the negative every month, right? You don't need to do anything, right? You don't have any profit to distribute. You're fine. However, that's still a problem, right? We want you to be profitable. We want you to be earning money in your business.
Can you
Does
go
that
back
make
to
sense?
that
Yeah.
Medicare and Social Security thing?
Yeah.
I guess my brain glazed over there. You said if we're an LLC and we only have one employee, really, the owner,
Yeah.
then why is he paying into?
It's a
It's just one of those weird
self-employment
things.
thing. Yeah.
So where do you pay that? Where,
So you'll do that during your taxes. Your
so
tax
during
return.
the regular 1040 time?
Yes, until I should say, until you start owing more than $1,000 worth of business taxes in a year. So do you use a tax preparer or?
Yeah.
Okay, they'll let you know when you meet that threshold, when you'll have to start paying an estimated taxes.
Okay,
And it's all, the government they're a pain in the butt, but they make it really easy for you to pay them. So like there's these the active forms where you just put in all your stuff, like you don't have to log in or anything, and then you can pay it in. So they make that easy. Your tax preparer, they'll be able to give you like vouchers that say like,
Yeah.
this is how much you should be paying.
The,
Yeah.
So what benefit are you getting from that? My husband doesn't get Social Security. He doesn't qualify for Social Security, but he's now gonna be paying into Social Security as if he,
Yeah.
Employed?
So basically what happens, right, with an LLC and a sole proprietor, you get to take your money out without having any of those, like if you think about a W-2, you've always paid Social Security, Medicare, federal and state. So basically, we have to pay all of those at the end of the year, right, when we file our tax return.
yeah,
And so self-employment is the Social Security and the Medicare part of it. Why is he exempt from that? Do you know?
he was a 40-year federal employee and
Okay.
they don't get Social Security. He has a pension. Doesn't
Okay.
qualify. He's got some quarters from prior to his federal employment,
Yeah.
but, he needs 10 more quarters to, I think it is, 8 or 10 more quarters to qualify for
Qualify.
Social Security. So,
Okay.
I
would talk to your tax preparer.
Yeah.
That seems like a unique situation. Maybe
Yeah.
you don't have to. I don't know. They'll be able to figure that out for
Okay.
you. Yeah. Tax stuff, yeah. It's a lot, right? It's a
Yeah.
lot. If you use TurboTax, they're gonna calculate all that for you. Yeah, if you have a tax preparer, they're going to make sure that you're doing everything you
Yeah.
need to do. So
Okay.
either way, you're gonna be fine. It's just an added thing. Basically, it's making sure that you're paying that because you're not paying it as an LLC in a different way, right? You don't get a pay stub.
Right,
being an
right,
LLC.
yeah. Okay,
Can I, like, all the expenses that I've had to open Raices,
Mhm.
can I do it like in this summer?
Yeah.
Like, because we spend nothing, like a lot of money.
Yeah.
And I have paper that support my thing.
Mhm. Yeah.
So can I do?
So you can do startup costs for up to 2 years. So yes,
What's the
want-
name of the thing?
startup
Startup.
costs.
Start, like a start pastel?
Yep, start up
Of
costs.
cost.
And so that
2
is
years,
like,
like 2 years behind, like.
it has to be within 2 years. You have
And
to start a new business. So that's like your legal that you were talking about, all of that. We want to absolutely make sure that that is recognized on your tax return as a business deduction. Anything, right? Anything that is connected to your business.
Gasoline or also.
So-
Camera.
Mileage is better. Mileage is mileage, which is like how many miles you traveled to get wherever you needed to go.
Yeah.
That typically ends up being more advantageous in terms of a deduction. For gas, typically you need your car to be in your business's name if that's organized, right? You're going to pay less in taxes. Absolutely, right? And so especially like getting that bank account and sticking to it, like I
Yes.
have my debit card, my credit card in my wallet so that I can, no matter what's going on, I'm always keeping those separate. Because life is busy, right? And if you paid $30 in cash for something for your business, what are the chances you're gonna get that onto your profit and loss
Yeah.
sheet? Probably not great. So setting up
Exactly.
those systems is key. What, do you use anything? Are you tracking your finances
Mhm.
right now? What are you using? Do you use like QuickBooks or Wave or a spreadsheet?
A spreadsheet.
Spreadsheet, okay. And so
How many, yeah.
what you're studying, okay. So here are your options, right?
Excel, that's.
Excel,
Google,
yeah.
Excel or Google.
Excel.
Yeah,
Yeah.
yeah,
I like that, Google.
okay. So spreadsheets are okay. And we're gonna talk about why it's better to be using a software. So the main thing with spreadsheets, right, is that it's reliant on you to get all of those income and expenses into that spreadsheet manually. right? To me, that seems like such a time cost for you that using a software to me seems like a no-brainer, okay? Wave, the middle one, that is a free software.
That's free.
Yeah, free. That does everything you would need for both of your businesses to
Okay.
suffice. We're gonna talk about what they do. And then the industry standard, right, is QuickBooks. QuickBooks,
QuickBooks,
yeah, the last
great.
one. If you feel like you might delegate your bookkeeping to an accountant, a bookkeeper in sometime in the future, right? QuickBooks, you're gonna find a bookkeeper and accountant the most easily, okay? If you're going to stay in-house indefinitely, like if that's the plan, then I would recommend looking at Wave, right? Wave is free. QuickBooks, the lowest version is now $38 a month, which to me seems kind of crazy. Like that's a lot of money. So keep that in mind. We're
I'm
gonna
try Wave.
I
I'm
just-
going to try Wave.
I
Yeah.
just paid, I swear I only paid $3 a month because they were having some kind
discount.
of
Yeah,
sale.
yeah.
And if you only have a solo,
QuickBooks?
yeah,
Oh, are you on Solopreneur? Is that what you're doing?
yeah, I'm on solo because my CPA can see it without any extra cost. So he can actually log in and look
Yeah.
at the QuickBooks. So he,
Yeah, so that's what I was gonna say. That's what I was saying, right? Quick, if you want to have other team members being involved in your books, so your CPA, your tax preparer, your bookkeeper, they're going to want you to probably be with one of the bigger ones, like QuickBooks. Xero is another one where they can manipulate, they're familiar with. Like for me, I'm a bookkeeper and I only do QuickBooks. Like that's the only one. If you have something else, see you later. Like that's this is all I can handle, right? So keep that in mind. I'm not saying it's the best, right? I feel like QuickBooks is very greedy right now. They're like wanting all the money. They're trying to like replace my job. Like they're not my favorite people, but it's what I know. It's what I do. Either way, either software that you use, here are the main benefits of using a software. So the first one is probably the most important one, syncing. What that means is I can take my business bank account, link it to QuickBooks. Have you seen this already? And it's going to bring in all of my transactions. So I just went and bought these donuts this morning, right? Swiped it on my card. When I log into QuickBooks, I'm going to see the donut shop, the amount of money I spent, and then all I have to click is, I mean, if I didn't really buy these, but
Save
supplies,
time,
present
save time.
supplies,
Time is
right?
money.
yes.
And then I'm done. It took me less than
And
a second.
accuracy too. because
Exactly.
you can easily split.
Do it.
And where that's bringing it is into your report. So now you've already created the reports that you need to check out your profitability, to file your taxes, all of that, right? It's already done it for you. The second one is invoicing, okay? I highly recommend that you consider moving to invoicing on QuickBooks.
Yeah.
You've already got QuickBooks, right? So
Mhm.
here's the thing. With invoicing, right? I can't believe the amount of, sorry, I know about you.
No, they're fine.
My legs are, I'm like, I don't move around. Amount of business owners who are sloppy at invoicing and forget to send them, forget to follow up once they've sent them out, right? What QuickBooks will do is they're gonna give you this nice dashboard that's going to tell you all of the outstanding invoices, when you sent them. You can even click and see, like, has this person viewed it? How many times have they viewed it? When did they last view it, right? To be able to see like, ooh, do I need to send an email? Do you think something's wrong? You can really be on top of it, okay? You can also have them pay through QuickBooks. And QuickBooks takes a small fee. It's 1% for ACH and 2.99 for credit cards, but that's the same as Square. That's the same as what Square would be. But it's nice to have everything in one place. You set up your products and your services, and then again, it's saving you a lot of time on creating those invoices as well, right? Repair, $100 an hour, 2 hours, there you go, send it out.
Well,
right?
and again, it's accuracy because my husband did his first invoice and I added it again and it was off. Now, it wasn't off by much, but.
Yeah,
And then
Still,
it
yeah.
was sloppy. He's like, I'll just cross this out. I
Yeah.
said, no, we're gonna do.
yeah. Yeah, being professional too, right?
Yeah.
Like having that, it's something I say, all the time. You want to make it as easy as possible for your customers to pay you so that they come back and have another good experience with
Yeah.
you. I bring up the story of my well at our house. Our well was broken and the guy came right away. He fixed it. He did a great job. And then he tells me only cash or check. And I'm like, oh, we don't we don't have a checkbook. Or my husband's like, well, that's a checkbook. He doesn't have it. I don't have any cash in our house, right? So I was like, okay, I guess I need to go to the ATM, get you some cash, and pay for this thing. Do you think I want to call them back again? No, right? I'm like, no. Let's move on. So try to make sure that that user experience is as good as possible, especially for you with people traveling, right? And maybe an hour plus to
Yeah.
come get their motorcycles fixed. They want to make sure that that's the only hassle is having to travel to you, not to pay you all that other stuff.
Yeah.
You Square, I would stick to that, right? That you don't need, I wouldn't recommend you using QuickBooks. AI rules and apps. So they are going hard on the AI integrations in QuickBooks. Some of the things you can do. So let's bring back up the donut shop, right? Say Winona says, oh yeah, Jamie, I want you to come every week to do these presentations. And I say, okay, I'll bring donuts every time, right? I can have it so it says, when a donut shop transaction comes in, please put it to supplies and materials, right? And so every time that I charge on this, it's gonna go to there. I don't even have to look at it, right? It goes directly to where it belongs. This is great for recurring expenses like your software, your Square fees. It could be your rent, like maybe if you do start paying rent, having that go every month, it's going to categorize it to rent, your husband's name, and then it's off.
That's
So
a thing, right? If I start paying rent, it's going to affect him.
well, he'll make revenue and you'll make an expense. So it doesn't. It's pretty much a wash. Yeah.
He likes to all his clients paying him in cash.
Okay.
He start charging with the card, but he like check or cash. It's a all, it's his way.
How does he keep it all organized?
He have his own, I don't ask.
His own system.
His own system. But he had like 20 years doing that.
Yeah, you're not gonna change.
I'm not going to change him and I don't want to change him. Like, so how?
Here's what I'll say for that. Like I've had clients, right, who are adamant. Like I had an alteration lady and I was doing one in Danville and she was like, I do it all on paper. I've got my paper, I do this, I do that. Guess what happened to her? She got audited. And let me tell you how awful it was for her to have to go through with the auditor all of her paper things to explain this, and this. And when the auditor came, do you think he was happy to have to look at all of her chicken scratch, right, for months and months and months? So he was probably harder on her, right? She had to pay a fee. I'm not saying she wouldn't have had to if she was using a software, but it only takes one experience to be like, oh crud, I need to fix this. So not saying it's ever going to happen, but you just want to make sure that you have systems. What if something happened to your partner and someone else had to come and step in and work there for a couple of months, right? We want to make sure that these systems are ready for whatever happens. Also for selling, right? If he's been doing this for 20 years, does he want to sell the business or will he just dispose of it, right? So if he wants to sell it, you want to have systems like a software that's helping with the finances to say, here's what's going on, take it or leave it, right? So just some considerations to make. I'm not saying one way is right or wrong, but yeah.
Yeah.
And then receipt capture. You are responsible for keeping your receipts for 3 years. Basically, the amount of time that you're able to get audited, right? They go hand in hand. So thinking about how you can best organize your receipts. So QuickBooks has a receipt capture option, so does Wave. However, I feel like you're giving a little bit too much power to QuickBooks by holding all of your receipts in there too, right? Like how they just had this new price increase, like who knows what's gonna happen in the next 3 years. So I recommend what I do and what I tell people to do is get a Google folder, right? Label it the year. So mine says 2025. Inside of my folder, I have every month, January, February, March, and I drag and drop my receipts for the month. I take a picture, screenshot, or screenshot, picture, whatever, and I put it into that folder. So if I ever got audited and they said, I want to see all of your April receipts, I can click on that folder, send it off to them. Okay? If you do it old school, right, with folders, you want to make sure that they're stored in a place where they're not going to fade, right? So making sure that they're in, like, no light is getting to them.
Okay.
So how are you guys handling receipts?
I'm just using paper right now.
Paper right now.
Folders, yeah.
Okay,
Paper.
paper too, okay.
No, I take a picture.
Yeah,
Es que, yeah, for everything, I take pictures.
good.
The problem is that I'm not organized on my phone. Because that's the other thing, I have
Yeah.
like, you know how many
Yeah.
pictures, so buy, and I was trying to do it in the morning, but I can't like, copy in the album,
Yeah.
right? And
Yeah, can you make an album for the?
yeah, but
year?
why doesn't move the picture to the,
Oh.
I don't know, I don't know, I need to go to, I have the 20, I don't know, the Samsung
Okay.
thingy. It's like a very good option for me,
Okay,
because have a good, it's like a computer.
yeah,
I don't know. Uh-huh.
so yeah,
So I think it's-
just so that they're all in one place, like if you wanna keep it on your phone,
Mhm.
I would just make sure you can back it up somewhere. Right, your phone, if something happened to your phone, but what would you do then?
Everything is on Google
Okay, good. Yeah.
Air, or how do you call
Yeah,
it?
Google Drive,
Google
yeah,
Drive and everything.
okay,
Yeah.
good, yeah, you just wanna make sure it's in a safe place, in an organized way.
And also, because I cannot do it, I take a screenshot and I put it in I have WhatsApp
Mhm.
with Raices.
Yeah.
And I paste everything there. So if you need something for my business, oh yeah, I go to Raices and I have everything there.
Okay,
It's how I do it.
does that feel organized to you? You feel comfortable?
Yeah,
Okay,
because if I need something, depending what I need.
it's there.
Mhm,
Okay.
Finding it when you need it, that's.
Yeah, well, that's where me, I'm like, if I have to like scroll in a text message, I'm like, oh my gosh, I have no idea where this thing
Yeah.
is. But whatever works for you. Remember, I am the bookkeeper person. Like, you guys are the experts at your business. So like, know that if you're like, Jamie, not doing that, that's totally fine, right? I'm just trying to give you guys snippets of good advice. All right, so we're going to get into a little bit more of the weeds with reporting and seeing what makes a good business. So I have some documents for this business. This is called Craig's Landscaping Business. So Craig is a one-man team. He's just started his business. He needs to pull $2,000 a month from his business to live, right? His lifestyle. And he's also a seasonal worker. Okay. So he has his peaks. Spring and fall are his peaks. Winter and summer, not so great. Okay. So when Craig started filling out, he signed up for QuickBooks and he started filling out his chart of accounts. Does anyone know what a chart of accounts is?
I should.
A skeleton, like the main skeleton.
Yeah.
I understand.
Yeah.
Skeleton. Like your bones of the business.
Yeah.
Uh-huh.
So it's really the foundation of your business. And so regardless if you're on a spreadsheet, if you're in a software, you want to be thinking about your business in this way. And so if you're still on a spreadsheet, Sandy, right?
Mhm.
I still want yours to look similar to this. So like if we're looking down the spreadsheet, first you have your income, obviously, right? And so thinking about your income, is just having one sales account enough for you? Or if we go back to the very beginning of our time together, should you be tracking different revenue streams, right? So like you, I think you should definitely be doing cleaning versus repairs, right? That'll be important to see where your revenue's coming in, even month by month, right? Is everyone wanting it cleaned in the fall and repairs in the spring, right? So that you can be prepared, maybe having those parts, doing your advertising for these things, being more strategic once you have this data. For you, Sandy, maybe it's thinking like, do you do anything online yet?
No, because
E-commerce? No?
right now, no, I'm not ready.
Ever?
I'm not ready.
Is it ever? Yeah.
I used to do it in
Okay.
Texas,
Okay,
but no, right now, because I have glass,
okay, yeah,
Oh,
it's
yeah,
a
no
lot.
shipping.
Yeah.
The shipping, and if something breaks, and no, I want to
Okay.
stay right now local.
okay, all right. Well, in 5 years, right? Maybe we're gonna track in-store versus e-commerce. Maybe you're gonna do a glass blowing workshop, right? I don't know, I'm just making stuff up. Maybe tracking workshops versus sales, right? To be able to see, maybe not, maybe you're like Jamie, I'm doing one thing, I'm gonna do it well.
But
That's
I
it, yeah.
already, like 5 years ago, I was working with a lady that she make websites to
Yeah.
with the car and everything. And
Yeah.
she said, oh, yeah, I was like that to do it. It was like 2000 with everything. But I stopped because I moved to States. But the thing is, with that one, I was thinking just items like small items. But with her, she explained me, you have to put every single, the weight, the measure. Is much time spending in describing
Yeah.
each product.
Mhm.
And my products are unique
Yeah.
because it's handcraft.
So you're
It's
just not-
artisan.
yeah.
So
They
Yeah.
change all the time.
I cannot have the same thing every single day.
Yeah.
So
That's
that's why I was
Are
like,
they similar? Like, could you say like I buy from Etsy all the time and it says like the actual product may be somewhat different than like the pictured item, something like that? I'm
yes,
not saying you need to. Honestly, I
No,
think
no.
e-commerce is not great. Like you're gonna spend a lot more money on e-commerce than in-store sales. So just as an idea, right?
I know.
Then we move to expenses. So we have two different types of expenses, right? We have cost of goods sold, COGS, is what we call it in accounting word in the world, right? Which is anything that you need to purchase in order to provide your service. So that is you buying all your inventory, that's buying your parts and materials that you need, right? And then the second half of expenses are your operating expenses. So this is your softwares, your licenses, maybe some contract labor, maybe payroll once you get there. All of those expenses that keep the business lights on, okay? Then we have assets. Asset is anything that you own and could sell to get more revenue, right? So this is your bank accounts, right? You can pull that cash out of your banks. It could be equipment, right? So typically we think of assets as $2,500 or more. So I don't know how much that cleaning machine
yeah.
is or not.
We've got we've got $40,000 in it.
Yeah, right. So we want to make sure that gets to your balance sheet under assets. So what the main benefit of that is if you ever needed a loan or something, the banks want to see that you have a lot of assets in your business, basically like equity in your business. Okay. So liabilities is anything you owe. These are your credit cards, loans, mortgage, all of these. You guys really shouldn't have much. I'm hoping. Yeah, good. All right.
I mean,
And-
credit card, but.
Credit card. Yeah. And then your equity is the money that you contribute, owner's investment, right? Or take out, owner's pay for your business. And so that, right? This is a great thing to check out how much are you actually paying yourself every year, right? You guys are doing the hard work of being a business owner. We want to see that money come out and fund your lifestyle, right? I try not to encourage you to keep all that money in your business indefinitely, right? You want to do this work so that you're actually going on vacation, getting your nails done. I don't know, something, right? Like you want to make sure you're pulling your money out to reward yourself as well, as long as it's healthy. And All right, when we look at all these, sorry, I should have done this one first. Each of these components is really helping you to make good decisions in your business, right? I keep coming back to that making financial decisions. So by having your income streams be really tight of what you're how you're making money, you can decide which revenue stream am I going to prioritize, which one am I going to cut. Expenses, being able to cut costs. All right, it's so common being a business owner to keep. Oh, who cares about the $38 QuickBooks? Who cares about the Canva subscription? Who cares about, it's all in the business, who cares, right? It's still really important to be lean, right? We want to make sure that you guys are pulling money out of your business. You're not just expense. Assets, right? Depreciation. So if you have a physical asset, right, what you'll do in your tax return is you'll take some of that as an expense every year. This is more like tax preparer stuff, but it's important to kind of be able to know that you're going to reduce your income by whatever that depreciation schedule, your tax preparer will tell you about that, is. Liabilities, cash flow, right? We want to make sure that every month you're not only able to pay off, not only able to cover your expenses, but also those credit cards, those loans. And then finally, we just talked about lifestyle. All right, here's an example of QuickBooks' chart of accounts. All right, what QuickBooks is going to do is they're going to give you everything they think you might need. Like you can see this one. It's long, like this is only a teeny tiny part of it. Like all we can see is the assets so far, right? You want to go through this if you use QuickBooks and you want to inactivate everything you're not using. So Carol, since you are using QuickBooks, I just want to show you. You'll click on this down arrow over here. Like if you're not gonna do, let's see, expensive the truck, right? You don't have a truck. You'll click on this down arrow and say make inactive, and it will be removed from this account. You can always make it active again. So I would say make it look like your business today, right? Don't be like, oh yeah, someday we'll have a truck. No, just get rid of it for now. When you have the truck, you can move on. All right. So again, the reason that I think having a software is the most important, right, is to be able to run these reports. So these are the 3 reports that you should be looking at. I say profit and loss, you should be looking at a monthly balance sheet, maybe quarterly cash flow, depending on how your cash flow is going, right? If you're having some trouble, you probably want to be looking at that every month too. Oops. So here is Craig's landscaping profit and loss. Let me see. You guys can't really see the bottom. Okay. Oh, I can't get rid of that, can I? All right, sorry. This is important. There we go. Okay. So how's Craig doing? Going to take a minute to look at.
He's making 620. What is this, a month?
This is a month. Yep.
And you said he needed to make 2,000 a month.
Correct.
And he,
Okay, he's just
Net-
making 600.
Yeah.
So we've got some issues, right?
Yeah.
What else do you see?
his gross profit was, wait, yeah.
The plants and soil is expensive. He needs to go and get another place and find.
So that is what he charged his clients,
Oh,
right?
That's
So
what
if we look at this, right? I need like a pointer, right? That income goes to here, right? So all
Uh-huh.
up there, he's charging his clients, that's for the plants, fountains, his services. So he's bringing in 2,195. Yeah.
So cost of goods sold.
Oh, look at that.
And then his cost of goods sold. So something I think about, right, is wow, for those job materials, he's charging his client $1,700, right? But it actually only cost him $200,
Yeah, that's
right? So that's a big markup, which is not necessarily a bad thing, right? Like if that's what he's doing, that it's working, right? So we have our cost of goods sold. This is going to show us our gross profit, right? The 1,900. Then below, here's all of our operating expenses, leading us to our net income, which is our profit. So
So I realize he's a single person running this business, but you don't put labor costs in there?
So labor costs
Or
would
am I
be,
not seeing it?
nope, so because he's doing it himself, right? So he's him. Labor costs, if you have someone that's doing your, like, providing your service for you, we would call that cost of labor underneath cost of goods sold. Or if you have someone like a bookkeeper, an admin person, you would want this to be down here in the operating, right? You could have a contract labor down here. I'm often found under this legal and professional fees is where people put me. You have some flexibility. What's important is that you're consistent month over month, right? I don't want you to be up here one month, down there the other. We want it to be throughout. But you as the owner, no, you're not accounted for on here. This is you, right? This is,
Right.
that's your wiggle room money.
Yeah, okay.
Now, if we look at this, how much tax should he be putting aside? Ballpark. You can do kind of bad math if you know it's mental math.
What's the percentage?
That's it. $200 and some dollars.
Ish, yeah, right? Maybe a little bit less, right? So we're gonna take
What is the percentage?
30%.
30% of your profit is safe, is a safe amount. Depending
30%
on
of
your financial situation, it's based on your tax bracket. Right, we wanna think about your tax bracket plus your self-employment, which for most people falls into, about 30%. If you're independently wealthy and have lots of other income, maybe your spouse is making a ton of money, right? Then you have a higher tax bracket. You might want to do a little bit higher. If you have lots of kids, you might want to do a little bit lower because you have all those dependent tax credits, right? 30% is just like, most often it's gonna cover what you need. Okay. Any outliers do you see where you're like, what the heck's going on here? Anything?
Oh, shoot, here I'm writing, I'm just making notes, something.
No, take your time. Anything that you're like, he should cut this. Here's something that I don't like. So sometimes QuickBooks will give you one called miscellaneous. Here's the deal, right? What you're gonna wanna be doing is taking this and putting it into your Schedule C 1040 form for taxes. So if you can mirror that as best you can, then you're going to you're gonna have a place to put all these numbers, right? We wanna be able to drag and drop pretty much these numbers to your tax form. Miscellaneous is not on there, right? We wanna make sure that actually says something. So where can we either add it here or add a new account, right? We wanna make sure that like other expenses isn't on there or miscellaneous or uncategorized. I think he's doing pretty well, honestly. I don't think that I think he's got a ways to go, but his profitability is there, right? We're gonna talk, let me see, yeah, right here. So we're gonna talk a little bit about some of these different indicators. So gross profit, right, is your income minus your cost of goods sold. We want that, so if we think about percentages, we want that to be about 60% at a minimum, okay? Or we want it 60% or higher, which means that the cost of goods sold is like a 3x, a 2x, 3x markup is what you want it to be collectively. And so he's at a 90% markup, which is great, right? That means that you can tell he's doing a lot of the labor costs, right? He's there. And then even the materials, he's marked that up a lot, which is, I'm not saying that you need to rob your neighbors, but he's got some coverage. Like, what is your markup? Do you have like a standard markup? Like, do you 2x, 3x? Like, basically, so you buy the item, right, from Mexico.
Mhm.
How do you change what you purchase it for compared to what you sell it for?
In every item, you have 3x.
3x, okay, good.
Is
Yeah,
but for example, I trying to do that with the silver and no, it's very expensive.
Yeah.
So in some products you
Yeah.
can't.
Yeah.
But the rule is
3x.
3x.
Is what you try. Okay.
But right now in some products I try 2x because
Okay.
I cannot pay. I mean, if I'm here buying this stuff, no, it's not a way. It's so
Yeah.
expensive, so ridiculous a price. So
Yeah.
So,
So another great thing you can do in Square is you can add the cost of goods sold. So you can say like, I purchased the silver for $19.99 and I'm selling it for $39.99, right? And see what those profit margins are for each of them so that you can adjust your profit margins up and down as you need. Like I'm working with a client, she has like a gourmet grocery store and we're trying to make sure that all of hers are a little bit higher than she has historically
and that is free in the Square.
Mhm. Yeah. It's actually called the cost of goods sold report.
A
So-
cost.
Yeah, cost of goods sold. So, so yeah, we want about 60%, like make sure you're definitely at 50, if not more, right? So it sounds like you're there, you should be there, I think, yeah. And then we have our net profit. Net income. Why did I write that? Yeah, I mean, I meant to say net income. Net income, right, is your income minus all of your expenses. And that we really want to be at about like 30% minimum, right? We want to make sure that you're keeping 30% that chunk of the cost. And I think that's what you were kind of talking about earlier, right?
Mhm.
We want like 30 here. I guess we could do 40 here, right? If I'm saying 60% margin, and then that leaves another 20 for your op. That's bad math. 30%. Right? No. Yeah, 30% left for your operating, right? All of that depends on your business, right? I have zero cost of goods sold. So mine is income, expenses, profit. Like I don't purchase things for my business. Where you're solely reliant on that, right? So yours is probably a little bit bigger. Yours is probably pretty small.
Yeah.
And for me, it's hard. I mean, it's kind of hard because I pay in pesos and I pay in the currency,
Yeah,
and then I have to transfer everything to
Yeah.
dollars, and then yes.
yeah. But if you do it in Square, like do that
But how? A Square in my computer?
yeah,
So I
like you have the Square app, like you have
Uh-huh.
the dashboard, I mean,
but I just use it on the phone of
Oh.
the business.
get a computer.
I
Yeah.
have a computer.
Okay, yeah, use it.
Oh,
So-
so I have to download
No,
that.
it's just a website. So you go to the
I
website,
need to
sign in the same way you sign in on your phone. There's tons of reports. They're really good. So, sorry, I'm giving you too much homework. All right, let me see.
This is the way these things go. You go out of here going, oh my God. There's
Yeah.
so much.
No, but you have to start doing
Yeah,
the right
exactly.
thing.
Yeah,
Yeah.
and one
Like,
step at a time.
that's the hard part of any business. Start a business, but not just start selling. No, have everything like good, like
Yeah,
paper,
all the systems in
and then
place.
the system, and take
Yeah.
you like time. It's not from 1 month to another month. I mean, take your time, like 6 months to do
Totally.
everything. Yeah.
All right, and so the profit and loss, that is the active report, right? That's showing you literally the last month, what happened in the last month of your business. You can run this report annually, right? You can run it year over year, so I can see what happened in 2022, 23, 24, 25. You can do it month over month, which is really nice. That's what I was talking about before, like looking at those trends, like when's all the cash coming in? Maybe you're looking at utilities, like, oh crap, like electricity was $400 over the winter. Didn't plan for that last year, right? I didn't realize this, our storefront was gonna be crap for heating and cooling. So thinking about like how you can run these reports to really pull out that data, okay? And then your balance sheet. So balance sheet is more like your time capsule. This has everything added year over year over year over year. Basically, this is showing your total health of your business. And so it starts, you can see his assets, right? That's your bank accounts, your receivables. So again, if I'm using QuickBooks for my invoicing, it's gonna show me that's the amount of invoices he has out that he hasn't been paid. So I know that $200, or oh my gosh, $5,200 is coming in, hopefully in the next 30 days, right? Inventory, again, we're keeping track of that there. He's got his truck on here. Then we get to liabilities. This is what you owe, right? So here are his outstanding bills, $1,600. He's got his credit card. These are his sales tax. All right, that's on there. I don't know what this is, a board loan that he has, couple loans, right? He's got a lot of liabilities, $6,100. That's a lot for a one-man landscaping place, right? He's gotta get some of that down. Another loan, geez, $31,000. And then his equity. Yeah, we can tell here, he hasn't taken any money out of his business yet, right? He hasn't paid himself. We don't have owner's equity there. Owner's pay. So that's something we need to fix pretty soon if he needs to get $2,000 out of his business. So yeah, you can see his pipeline, right? He's got his accounts receivable, that money's coming in. He has a lot of assets, right? He could sell that truck. Might not be a bad idea. I don't know. What do you guys think? And how close is he paying off debts? Not very close if he's only making $600 a month, right? It's gonna be hard.
He needs to get people to pay them.
Yeah, totally, right? Like if that's a great thing, right? We're not always just talking about money. Maybe he needs to set up his system. Maybe he needs to change his net. Maybe he's gonna do due on receipt instead of the net 30. Alright, we're almost done, Sandy.
No.
I see you faded.
No. I'm thinking that.
I just need to leave at 11:30.
Alright, yes. I will get you guys out of time. We're almost done. These are all fast ones. Then finally, the cash flow, this is for keeping track of both of them put together. So it's gonna show you all of the income that you're bringing in, right? So that net income, that would be your profit. And then it's subtracting all of your liabilities to see, can you cover all of your costs? His is confusing. I don't like his. Because what it's doing is it's saying, here's his profit, right? Because this is for the whole year, not just for August, whatever the other month I had was. Subtracting all of his loans and his receivables to see this is actually the amount of money he has left. All right, so if you don't have loans, you probably don't need to be running a cash flow statement very often. If you do have loans, that is something that's gonna make sure that you can pay off your loans with your profit. All right. We've spoken a lot about all of this already, so I'm just gonna breeze through. So point of sale, Sandy's doing Square, Carol, maybe QuickBooks, moving to QuickBooks, right? Inventory management. Sandy, how are you doing inventory?
How?
Yeah. Not.
Old fashioned with my daughters. Like right now we have everything finally yesterday. In Google, in Excel.
Okay.
Uh-huh.
Okay. And how often are you doing the inventory counts? Like once a year?
So
Do you check your inventory?
yes, like I know inventory has to be, you sell something, you have to take out like be matching.
Yeah.
Okay. So we have that issue.
Okay.
So right now, today, I'm going to finish with her. The account, physical, everything, put it on the computer that we already have the file.
Okay.
And then I already put a formula. So it have to be subtracting the cost, the price. So yeah, I'm working on it, but
Okay.
it's kinda a lot of time. So I need something quicker.
I think you should use Square.
Yeah, that's what I'm.
Yeah.
I don't want to go. I just thinking how many things. But the first thing that I have to do is go to open the account in Wells Fargo.
Yeah.
Because everything has to be linked, you know?
Yeah.
I need to, so I need, right now, after this, I'm going to open the account in Wells Fargo. Wells Fargo is good, no? Because it's big. Troy's is,
Yeah, I like them. Yeah.
yeah, I like.
I think
so,
they have a maintenance fee. I think it's like $10 a month.
I don't
but-
care. I mean, it's
okay.
fine. So,
Okay.
yeah, because in Troy's, I was paying
Yeah.
monthly thingy for personal in the bar. No, no, no.
Yeah.
So I'm going to go there,
Okay,
and after that, I'm going to go to Square.
good.
Love that, you know, and I start putting everything in order.
Oh, yeah.
Because yes, everything
It's
is.
always something you have to do before you can do the other
Yeah.
thing, and
My
that's.
bag is not prepared. My bag.
So,
No, so many things that I know. And also, who can tell me what is the actually tax in Culpeper, in Virginia? What percentage?
Oh, 5.3.
Fine.
Well, 5.3 is for sales tax. I don't think you should be doing Culpeper tax for retail.
No. Just
Yeah.
for Virginia State,
Yes, yeah.
it's
5.3.
tax.
Yeah.
5.3. Okay.
Yeah.
I need that number. Okay.
Yeah.
I'm thinking.
Okay,
Everything is
okay.
very valuable, that information. I'm so
All right,
valuable.
my last thing is think about who can be in your corner, right? So, I don't think either of you need a bookkeeper yet, but thinking about an accountant, right? Having them be able to sit down and talk about what you can be doing throughout the year to maybe save some money in taxes, right? If you find that you're really profitable, do you want to run your healthcare through there? Do you want to open a retirement account, right? There's lots of ways to lower that tax liability once you get rolling. And then finally, think about using these free resources through SBDC and the Economic Development Center, right? They can help you literally with anything that is related to your business, okay? You can do one-on-one coaching as well. That's still a free resource. So you can have somebody that you're attached to, that they can help you with whatever's going on. Like I work with a lot of people who are ongoing where I meet with them once a month and we tackle whatever is going on in their finances. And this works for sales, for marketing, software, Square, right? You can find somebody that will be there to help you at no cost to you. So to use these resources, I think they're so valuable and what a cool thing to, an important asset to have.